Hey everyone, we got some big news for Boeing stock investors as the company's CFO attended a conference on May 23rd and provided great insights into the latest developments. So there was several critical items within that conference that I wanted to share with you, those of you that are interested in Boeing stock. So let's get started with the details. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Boeing CFO Brian West saying that I would say there's quite a bit of change happening at the company, both large scale and many smaller scale changes, all in the name of improving quality, reducing traveled work, and getting more stable. And you'll notice that all of these changes reflect the company's production. That's really what the name of the game is for Boeing right now. The company has hundreds of billions of dollars of backlog in orders, and it's going to take the company at least 8, 10, 12 years to deliver all of the planes that its customers have ordered. So what Boeing focuses on right now is really getting the production right, getting execution right, making these planes effectively, having good quality control procedures in place to avoid potential disasters and all of the bad publicity and the human harm that can happen if something goes wrong in these planes. So that's really the major area of focus here for Boeing, and it's insightful to get the developments on how they're doing on that front. So the CFO saying that it's encouraging, although you can't see all the benefits quite yet, we continue to be convinced that this is the right path. It's the right time to make these investments on behalf of long term. But the CFO acknowledging that it's going to be disruptive both operationally and financially. Operationally, they're not going to be delivering as many planes as they thought they were going to deliver in the first half of this year and probably for the full year. And then financially, if they're not delivering these planes, then they're not getting the cash inflows that they were expecting to receive given their timeline for deliveries. So it's going to disrupt their operations and their finances as they try to fix things and get the foundation right for the longer term. The CFO saying, as we exit June, we expect to be in a much better place than we are in the first half of the year. The second half of the year, our operational and financial performance is going to get better. The CFO saying that it's going to accelerate in the third and fourth quarter. So the second quarter, they said is going to be just about as bad as the first quarter, maybe a little bit worse. The third and fourth quarter, though, the third quarter is going to be better than the second quarter, and then the fourth quarter is going to be better than the third quarter. So they're going to get better as they get out of the year. And then as we enter 2025, they're more or less going to be in the spot where we thought we were this year, but with a much stronger foundation because of the work we're doing right now. So starting 2025 is when they expect to be on the right footing, back on that full pace, full production pace that they were expecting this year, but on a much stronger footing with less risk, with a much more robust production process, if all goes according to plan, which lately, not very many things have been going according to plan with Boeing. So this would be refreshing if the company does indeed hit these targets and gets things back online. So one of the issues have been with China. They ordered certain planes, and the CACC asked Boeing for additional validation on a battery recorder. And so because of that, they have not been delivering planes to China recently. And that will very likely have an impact in the quarter on deliveries and their cash flow. So this is a new problem, a different problem than some of the fuselage problems you may have heard about earlier in the year. This is a different problem relating to planes ordered by China, and the battery in the recorder. Boeing is having to add some more quality control in that process, and that's going to delay these deliveries. And of course, if Boeing delays deliveries, that delays cash inflow, and so that's going to have an impact on the second quarter as well. And that's part of management's forecast for why the second quarter is going to be just about as bad as the first quarter, when the company generated negative 3.36 billion in cash flow from operations. Management said it's going to be just about as bad as the first quarter, so they're going to lose about another $3.5 billion in cash from operations in the second quarter. Not very good at all for a company that, before the disruptions caused by the pandemic, they were generating $3.5, $4 billion in cash flow from operations quarterly and annually up to more than 10 billion. So at their regular pace, this company is a cash generating machine. It's got years and years of backlog in orders. All it needs to do really is fulfill those orders. It has very little competition. There aren't very many companies in the world other than Boeing and Airbus that can deliver these types of planes at this scale. So as long as they can take care of their process and execute, their business would do great. But the difficulty has been in those executions, in executing on their plan. So management saying that in the first half of the year, their production is going to be below 38 per month. There's been some hints that the production is actually going to be around 31 per month. And then in the back half of the year is when they're going to get back to 38 per month. And hopefully getting into 2025, they get back to that pace of 38 per month planes produced for each month. So like I mentioned, the company said that the second quarter will be more or less in line with the first quarter. And remember, the first quarter I showed you, they were negative 3.362 billion in cash flow from operations. Now, coming into this update, I had Boeing stock rated as a buy following the initial stock price drop following the disaster around February. And I've had the stock as a buy since that time. And after evaluating Boeing stock again today and going through the latest developments, I'm downgrading Boeing stock. I no longer have it as a buy. I'm bringing it down to a borderline. Now, I would bring this stock down a lot more, would it not be for its near monopoly in the business, the relatively few competitors, the difficulty in starting up a new company and the fear of competition from new rivals, and the massive backlog of orders. I mean, hundreds of billions of dollars of orders. And in fact, in the latest quarter, they were able to secure more orders. Customers are still ordering planes from Boeing despite the difficulties that they're having. So I was concerned that they would receive cancellations and a lack of new orders because of the latest troubles. That hasn't been the case. They've been getting more orders even though they're going through these troubles. And that just reinforces just the level and magnitude of competitive protection they have in this business because of the economies and scale they've achieved, and because of the cost of entering this industry is so large, the cost of capital to enter, the know-how, all of that, too difficult. So I'm only downgrading it one notch here to a borderline, given its difficulties in recent past. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.